This is the briefing for Friday, September 2nd. A little bit of a surprise in today's trading. In last night's briefing, I talked about the fact that we had the employment numbers coming out this morning at 8:30 Eastern Time, and that they would have a big impact on the determination of value on the part of traders. And certainly after they came out, the futures were up slightly, and then of course when we opened, you can see that the ETFs representing the indices were up as well. And it did appear that the rally was going to have some legs to it, but then it just kind of fizzled. And then of course we saw the retracement of all of yesterday and today's gains testing the low of yesterday. Now that low of yesterday and today now is a very important, very important key reference area, very important support level, mainly because now it is support in multiple time frames. And I'll show you. We have one time frame here, which is yesterday's trading. We have a second time frame here, which is today's trading, and then of course we have an intermediate term time frame, which I'll get to in just a minute. Now I do want to point out one thing, that as we traded into the end of last week and then into Thursday's trading, you can see that there was a divergence in market breadth. The market was strengthening, which signaled the potential for some type of pause or rotation back to the upside, which is exactly what we got in today's trading. It surprised me a little bit to see how strong breadth was at the open today. Breadth in the NYSE was over 2,000 shares positive, and in the NASDAQ was just under 2,000 shares positive. But you can see that it was pretty strong, and it appeared at least that the rally was going to have some legs on it. But then as it fizzled and as we saw the retracement, breadth began to decline. Now we didn't put in a new low, but we came really close to it, which would have given us another pretty substantial divergence in market breadth. But it may be that breadth just had not kept up with price in terms of a one-day move, and we could see this completely changed in Tuesday's trading, Monday being a holiday. The same thing with the NASDAQ. NASDAQ testing yesterday's low. The divergence in breadth was there. If we had taken out this low, that would have been an increase in the divergence, and would have suggested that even though price was down, the market was strengthening internally. I don't think that's the case. Whatever caused, and I haven't checked any news events yet, but whatever caused this move to the downside certainly was substantial, and we did have a lot of breadth that was worked off, and I think that it probably would have caught up with price had the market not closed at 4 p.m. today. Now, moving on to the longer term development, you can see that this 393, 392 area in the S&Ps, actually it's a 390 area in the spiders, is a really important area. Now, I pointed this out, I guess in two briefings. One, I guess back a week ago, when this appeared to be a head and shoulders top, and I don't like pointing that out because it's not a head and shoulders top until it breaks the neckline, which is what it did on this day here. But if you take the distance, this distance, and subtract that from the break in the neckline, or where the neckline is, it projected down to the 388 area, and that's exactly about where we came to, which happens to be important longer term support. So here we now have basically four areas of support: this area, and the two areas in the shorter term chart that I had just a little while ago. So you can see that now if this is broken, then that's going to open up the possibility of trading down into this 370 area. And as I said in last night's briefing, if that is broken and this is tested, this will be tested, and then the probabilities increase that it will be taken out. Now we do have a little bit of volume increase, but you can see this move to the downside. This is a daily chart, so you can see the divergence in breadth that was building going into yesterday's low, and to some degree into today's low, which was testing yesterday's. Now, NASDAQ looking in the same position. You can see the head and shoulders top. and then this projected down to the 288 level, and it came down right there about to the 292. So it didn't get quite to the extent that the spiders did, but the Qs came down and basically have fulfilled that. Now the question here is when we reach an important support area or key reference area, as this area is 300 in the Qs and this 390 area in the spiders. Typically traders know that where these areas are. I mean, those of us who study the charts understand where support and resistance areas are. So typically what will happen is when you come into an area like that, traders will step back to see if there's enough strength in the market to exceed the support or resistance level, and typically that causes a pause until something changes in their determination of value, and then you get a break out of this area of rotation, either back to the upside or to the downside. So it doesn't surprise me to see at least 2 days of pause around these important key reference areas. And as that develops, that gives us another area of good trade location. Now, I am a little surprised at the extent of this rotation, and that's exactly what we've got here so far. And there is a good probability we could see another rotation up on Tuesday, as we pause right at these important key reference areas for both the spiders and for the Qs. Now, if this area is broken, then it's going to open up a test of 280 in the Qs. If the upper side is broken, it opens up the possibility of testing 320 in the Qs. And I should point that out in the spiders, is this right around the 409, 410 area would be upside resistance for the spiders. Looking at the Russell, basically the same thing, came right down to this 178 level and held, and you can see this area of rotation, and if it breaks through, and I want to point out also that it is really rare, not unusual, but rare, that you see all of the indices at a similar key reference area at the same time. Typically you'll have one that will lag or one that will be out ahead of the others, leading the others. And if you've listened to these briefings, you know that I've pointed that out, the intermarket divergences that occur. There is no intermarket divergence right now between these three indices, in that they are at important intermediate term key reference areas, which was this pause area in all three of them, that breaking that extreme would then suggest rotation back through this range, and then a test of the June 17th low. And of course, if that's tested, there may be a pause for a short time, but it will likely get taken out. Volume increasing in the Russell and the IWM nicely. All the others had a little bit of increase in volume, but the one thing that is still concerning me on the rallies and on the declines is volume. This is total volume on the NYSE, and you can see how it is declining, even declined into today. This is total volume on the NASDAQ, and it even declined into today's trading. There's a little bit of strength over the last couple of days in the NASDAQ to the downside on that move to the downside. But in today's trading, volume absolutely fell off. Now, we did reach a point earlier this week of being extremely oversold in the NYSE and somewhat oversold in the NASDAQ. We worked off a lot of that in today's trading, so we're basically neutral. Now, the NASDAQ has converged, the indicators converged, suggesting that there's going to be a large move in one direction or another. Because we're not at an extreme overbought or oversold reading, it doesn't give us an indication of the move, of the direction of the move, I should say. But it does give us an indication that if we begin to break the extremes of the rotation for the last 2 days of trading, that we could see a fairly good move in the direction of the break. But once again, I'm just very concerned about volume. When I see a break like that, I want to see volume coming in. I want to see the breakout move attracting buyers or sellers depending on the direction of the break. And right now, we're just not seeing that in either direction, which is a little bit concerning. But we have to go with price development. And of course, we do have the benefit of being able to see whether the market is strengthening or weakening based on market breadth. Going to be an interesting day on Tuesday when we open, especially if these support levels are broken. Have a great weekend.